It is a time to change, and it's going to literally be done one project at a time, right? And we got to build a universe. We've been able to do it for every other major product in the world, right? We've been able to identify a problem. We need transparent pricing and a new marketplace, and then everything, all the related industries grow up around it, right? Well, we got to do that for carbon.
Today, I'm speaking with Tom McMahon, a very good friend of mine. In fact, one of my closest friends, who is the founder or co-founder of AirCarbon Exchange. Tom is an experienced market builder from the days of the old Chicago mercantile and commodities trading industry to where we are today in blockchain. The conversation that I've had with him is wide-ranging. And so I need you to hold on to your seats and sort of go with the flow of how he's explaining what the carbon trade market is, where it is today, and the underlying assets in the carbon trade market and how that's developing, and a little bit about his company and his business and the exchange that he's building. In the conversation, Tom explains to me some of the underlying principles for making a market like this successful in creating a carbon trading marketplace.
Emmanuel, thank you very much for the opportunity, and I appreciate. We are friends, and that's what makes this conversation pretty easy. AirCarbon, it began actually with a conversation with one of the agency heads here in Singapore back in 2018, and it was really simple in its mindset then that moving, post Paris 2015 and what we were coming to in 2021, could we form a carbon market in a broad stroke, and could it be done in Singapore? Could it be done around blockchain and distributed ledger architecture, the best attributes of asset-backed token models, and could we have a price? And all of those things had not been put in place by any means around carbon at that time. But more importantly, it was looking at the voluntary carbon markets, and that market very much post 2012 and the first expiration of the Kyoto Protocol expiration and post Lehman, the market had really just gone into what basically called the dark ages. There was no demand. People were not really paying much attention to climate at that time. And the marketplace itself was being pretty much run by over-the-counter bulletin board platforms in a fairly opaque manner. Even in 2018-19, there still wasn't a tremendous amount of awareness, but we knew from what had been believed that could be put in place post Paris 15 was really that in 21, the first truly global framework for carbon mitigation would come to in effect, and it was called CORSIA. And CORSIA came in under Icao, the International Civilian Aviation Organization, and CORSIA stands for Carbon Offset and Reduction Scheme for International Aviation. And it's important to note that because even today, you're sitting in China, and China's just coming to market with its ETS. That's not a global framework, right? That's a regional framework, and it's an allowance framework. It's not a carbon offset framework. You have to put that into perspective of the broader conversation. But CORSIA is applicable across 193 countries and every international flight that flies today. Now, albeit the world today is still in the throes of post-COVID, and the international flights are not anywhere near the scale that they were in 2019 pre-COVID, but domestic airlines have come back. I mean, China's at 100% capacity. US is back at 100% on domestic aviation. International will come back. But the importance was you could, for the first time, have a price that was as relevant in London as it was in Beijing, as it would be in Tokyo, as it would be in Sydney. Carbon did not have that in its place. Formation of AirCarbon took us 2.5 years. We went to beta in July, in the middle of COVID last year, finished our beta in November. And at that point in time, these voluntary carbon markets prices were percolating, but prices were not high. The demand was not there. I can tell you that here we are basically 7 months on from that point in time, and prices are up 300% in that same period. And put that into perspective, we follow the volatility of Bitcoin, or we follow the securities markets. If they're up or down 3 or 4% any given day, that's massive volatility. We have a commodity, carbon voluntary offsets, that have basically gone straight up from a sub-dollar pricing to over $3 in the last, especially here in the last 4 months. that people are still not necessarily paying attention to, but there is a market formation. So AirCarbon came to market bringing the best attributes of blockchain in the first part. We wanted to create a two-way price. You read the news as I do. The more corny Bill Winters task force that published their study on the voluntary market and coming up with a core carbon price and creating high quality and verification and all of that. Those are attributes that we embedded into AirCarbon during our build. And so it may sound like nobody was looking at it, but the reality is people were looking at it, and we were, specifically because there's common sense in how benchmarks are built. And if you look at carbon as a commodity, which it really is, even though it's an intangible asset, it lives in parallel with our entire food stream, our entire finance stream, our transportation stream. And if you listen to the language of what they want to do with it relative to trying to impede the 2%, 2-degree rise, carbon will be attached to everything in our daily lives going forward. So which means there will be a price attached to everything. Regionalization historically in carbon has sat around the allowance markets, and the biggest one being the European EU markets and the EUA, the European allowance. And there's a lot of misnomer that that's the price for carbon, and it is not the price for carbon. It is actually a price or permission to emit. And that's similar to what's being done in China around the ETS. That's an allowance market. So you pay a price to either be clean or dirty, fundamentally is what it is. And there's a finite number of allowances that are issued, and it's a controlled compliance market. The voluntary markets are not that. The voluntary markets sit in their own standard around the registries, which for the most part are NGOs. And there's not a limitation on how many carbon credits can be produced. The limitation is on the quality and the standards of the projects that are being supported and certified and registered. So that's what we brought to market.
Tom, you've loaded us with a lot of assumptions that someone who's new to the carbon trading market, we need to sort of slice them out to put them in perspective. Sure. So what you're saying is that because of the Bill Winter, Mark Carney proposition, they want to put a hard stop on the core carbon price, but the markets are still discovering what the price should be. And you are a creator of a marketplace. And so what the trading price of carbon turns out to be has a direct impact on you as a business. When you first set up AirCarbon Exchange, what was your assumption in terms of the price of the trading price of carbon and your revenues, your revenue feed?
In exchanges, in terms of how they make money, are not particularly rocket science. You either have a fixed fee commission on execution and data, or you have a variable fee that's notional, meaning that depending on the price of the underlying product you're trading, you will charge a basis point, say 53 basis points or 25 basis points or 100 basis points. And so you got a floating price, and you also then have floating revenue. We initially took a fixed fee structure, which is similar to ICE or CME or even the China market in terms of what you pay for a round turn transaction. Going back to the price of carbon, again, going back to 2018, the market demand was way different than it is today. It was very focused. It was very focused around transportation, and even more focused in terms of aviation was really the only one in the industry, in the global industry, that really was going to have any demand for standards at a specific date, January 1st, 2021. And all through 2019, we met with the international aviation industry, the related parties, the entities. We met with airlines. We spent time at different transportation hubs like Changi Airport. I spent time in Dubai with the Emirates teams, and we went to Heathrow for the Global Aviation Conference to meet with the entities that were preparing for what ultimately would be after 2019 and 2020, all airlines, that was a reporting period, a baseline would be built for January 21, and which means from that period forward, any passenger miles or utilization of fuel or equipment or routes that were above that baseline of 1920 recordings, every single entity would have to be offset. The question there was, what was the quality of the offsets that could be used to mitigate that requirement? And that was where Icao and the Corsia standard came about, and that was published in April of 2020. We had already started to get into the Corsia, the COVID period. No one anticipated that we'd lose all of 2020 and we would lose all of international travel. So they curtailed it. 2019 has now become the baseline, and here we are well into 2021. The anticipation prior to that was that there would be about 180 million tons of carbon credits that qualified and would be available for the airlines. And if the airlines went into it in what we had known in 2019, probably between 21 and 25, that they would use 120 to 140 million of those available carbon credits. So it probably looked like it would be around $2, $3, maybe $4 with what a carbon credit would cost. There would be a bit of an overhang of extra credits, and then people could judge the quality in between and sort of cherry pick what they felt was good for their corporate. What we found out was the airlines were not prepared for it. And then COVID hit, and we know that the demand for that particular type of offset would probably only be 80 to 90 million tons coming out of COVID. Now, let's switch the hats of what has changed. Usually you have to convince people to adopt something new. It has gone completely 180 degrees. Now it's like we can't adopt it fast enough. So what we've seen that we thought would be very airline or transportation based in demand has gone completely the other way. To every regulated entity in the world that's listed on any exchange has now got an ESG, a reporting mandate, but now they've got a performance mandate. And whether it's coming from their regulator, or it's coming from their shareholders, or it's just coming from awareness that consumers and investors will no longer tolerate companies that are not embedding not just verbiage, not just marketing, not just changing your PowerPoints to green actionability. So we've seen demand is now pretty much far outstripping supply in terms of a quality credit. Now, if you go back to the task force intention of having a standard high quality price, what they're calling core carbon, is one that's not a bad thing. The key is, how do you get to that? It's market demand. And like any other commodity in the world, price are no different than a share of stock either. What's the value of Apple today versus Apple tomorrow? I couldn't tell you what it is tomorrow. I can only tell you what it is today. And then the talking heads will either tell you why it's doing what it's doing today, or tomorrow, carbon is doing the same thing right now. We have a huge amount of demand drivers. And when we, again, going back to when we began AirCarbon, our goal was to get 20 commercial entities on as the first core members. Now there's 300 plus airlines in the world. There's really 60 major airlines in the world, and we wanted to get a third of them to participate, or their related parties, like their fuel suppliers, like a BP or Shell or something like that. I can tell you it was a struggle in the beginning, because what we found out was the aviation industry was not prepared for it. A few were, mostly the Europeans and one of the American airlines, but more importantly, it was their supply chain that was prepared for it. It was BP who was selling jet fuel to Singapore Airlines, and BP would supply the carbon credits. Similarly, Shell and Chevron and such. So then we turned to speak with them. And as we shifted in the market, we realized that they were making so much money with the opacity in the market that they did not really want an open and transparent market. Now I'm talking about a year and a half ago. I can tell you today, they can't get onto a market fast enough. The demand for killing the opacity, to go to full transparency, to go to full accountability in what's the quality of the credit you're trading, where are you trading it, who are you trading it with, who's the beneficial owner, who is the registry, who is the certifier, who's the auditor. All of this literally 12 to 18 months ago didn't matter. It does today. So we've seen a significant shift in demand. We've seen a significant shift in the requirements of how this market is formed. So for us, getting the first 20 was a struggle, and then COVID came, and then the awareness, especially in the last quarter of 2020 into these first 2 quarters this year, we have 132 companies that are on our exchange. We believed our core interest would be from Asia or Southeast Asia, because that's where we were based in Singapore, as a trading hub, fundamentally. We have member firms now from 27 countries around the world. And it's not dominated by Asia by any means. And you know as well as I do, you couldn't travel a whole lot during COVID, but I have not been on an airplane since January 12th last year. I did this all over Zoom. And we got access to people we probably wouldn't have been able to get access to. So the cooperative effect and the awareness and education around carbon came very fast. And it's more now in education. So we spend a day, at least 1 or 2 full days a week, talking to very smart, a lot of times very high ranking corporates that are just going, hey, we understand we've got to decarbonize. We understand we do have a carbon footprint. We understand our requirements from our shareholders or our regulators or our financiers. We have no idea how to do it. We have no idea how to do it. We can talk about it. We can give you a metric. I'm going to be 25% cleaner by 2030. I have no idea how to get there. And that's the demand, and that's where the market demand is. For us, the first key was to bring some standards that I understood on how do you form a commodity benchmark, and carbon did not have that discipline. We've achieved that. The other one was to have a two-way price for carbon, not just a one-way risk by, I've got a carbon credit, I'm selling it to you, I sell it to you, and now you figure out what to do with it. We wanted to change that. So we've got a two-way price 24/7 on carbon. We also have the ability to custodize it. And the key, and as you know in this conversation, it's all about the data, all right? What is the quality of the underlying credit, the project, the vintage, the location? What does it represent? Is it a nature-based solution? Is it industrial gas mitigation? Is it wind? Is it solar? Is it hydro? So basically those categories of renewable energy or nature-based solutions, or are you looking at the newer end of it, carbon capture and carbon sequestration and carbon removal? So we're addressing all three of those within our product mix. So now it comes down to how do you serve the client in this world that they don't really know what they want? But you know that they want it. It's an awareness, it's a demand, whether it's called impact investing or green investing or decarbonization or carbon mitigation. The goal is all the same. So by putting it on chain and creating and using the best attributes of Ethereum ERC20 tokenization methodologies, and this is not about crypto. This is about systemically taking all of the relevant data that sits in 4 or 5 different places today relative to a carbon credit and bringing it into a single unified point, putting it into a trust, a bankruptcy remote trust that adheres to standards of regulatory frameworks around custody, and producing a tradable, basically call it an electronic warehouse receipt. And that's what the token model is for us today. So for the first time, you can own a carbon credit, have a transparent price, have a mark-to-market price on it daily, and it's securitized, it's transferable, and it's efficient in how it can be moved, whether it's being transacted or held as an asset. And that was another thing we fixed. I would buy a carbon credit off of one of the bulletin boards, and it's all OTC, there's no guarantees. And I would send my money first, and a couple of days later, I'd get a notice from say, the Verra Registry or the Gold Standard Registry. So we've created certification and verification. So for me, being an old crusty exchange guy and working through all the iterations of exchanges from, when we wrote up trades with pencils and erasers on them, to fully electronified markets and recording, and now pushing it into the blockchain and verification model. It's an ideal for me of what an exchange should look like. And it's a perfect product to do that with.
Tom, I let you just go on for the last 20 minutes explaining or setting up what's in your mental map. I was hoping to start the conversation with the company that you set up, the products it has, which is AirCarbon Exchange and the tokens that you have. But what you did was you launched right into the market itself. And if there is no market, there's no price discovery. You can have a baseline price, but how do you know what should the market pay for it? Who are the participants in the market, and all of that? You went right into the market issues, and that the airline industry, the aviation industry, is probably the first to set up a token, a carbon asset, that can be traded in the first place. But you have several tokens, don't you? You have Ccers, you have got global nature tokens, ESG, and renewable energy tokens. So does that mean you've got 4 products, or is that 4 different types of tokens on your exchange?
The underlying are all voluntary carbon credits, right?
Okay.
That's the standard. Okay.
By definition.
So Ccers is that it was a standard that was set by Icao. And as I said, importantly, that is actually the only global standard for carbon. It's the only one. No matter all the noise that you hear, it's a misnomer, because the Ccers is the only one that's applicable globally. Everyone else is going to build under a variable of what with the Paris Accords. I can have an ETS, I could have a carbon tax, I could have a cap and trade mechanism, or I could have a carbon club. I could join up with another country and form a club. Those are all silos, and they're not fungible. The key for what we've done with the voluntary carbon credit is to create a fungible product that can be invested in from US and Canada and Mexico as much as it could be for China, Hong Kong, and Macau. It's as relevant in both places, and that's a good thing. Ccers said you could use these 6 different registries, the top 2 being Gold Standard and Verra, and you could take credits within the methodologies that they identified, like forestry and water and such. But it had the credits had to be relevant to carbon projects that were registered from 2016 onwards. So 2016 to 2020 was the first tranche, and now we're in 21 and they've been added. So they didn't want older credits. They didn't want older projects, which existed. They wanted to make them relevant to the world we're in today. And so Ccers had a very clear definition. So that was easy for us to adopt.
So if Ccers had clear definitions,
yes,
when you created your token,
yes,
the classifications in your token are just taken from Ccers and put in there.
Right. It was easily adapted because they set the specification. So the relevance to that is, and we use this analogy, my partner Bill Pazos uses it all the time. We take for granted commodity benchmarks today. And he uses the soybean analogy. So soybeans on the Chicago Mercantile Exchange. Really, the key to that is if you think about what's a soybean. So a farmer grows the soybeans, and the inefficiency would be him to load them up into his truck, put them and drive around Chicago trying to find somebody to buy his truck of soybeans. And then he'd get somebody to come out, like say somebody from Cargill would come down and go, hey, where'd you grow those beans? When did you harvest the beans? How many beans do you have in the truck? What's the moisture content, right? That kind of stuff. That's inefficient. The efficiency came when you created a standard specification of, look, all soybeans that are this year's crop and have this much moisture content can be deposited in this silo. And then once we weigh them and make sure the specification is within these standards, you then can go trade that on the exchange with this warehouse receipt. So the receipt, the paper receipt in olden days, not too long ago, that's the tradable asset. That's the tradable asset. So here we are today in the modern world, and we're still trading warehouse receipts, and the
Okay.
receipt is representing some place like an oil depot. We had a depot that I ran in Nansha down in the Pearl River Delta, and was a delivery point for Sinopec.
Which had its own problems in terms of reliability and,
Right, exactly,
integrity and all that.
So we tried to clean that up by using the best attributes of blockchain and ledger architecture, asset-backed tokenization. All the metadata was captured around that standard of Corsia, and that's how we defined it. The next three contracts were not as easy because now we had to decide. So global nature. So nature has been very much in the news. You hear about it all the time, that seems to be the defined solution for anybody who wants to put money in, and that includes most of the oil majors. They've said, look, the cleanest end of the spectrum for us is completely opposite to what we are. I'm sucking oil out of the ground and polluting, or I'm taking coal out of the ground and firing it. I need to put the trees back in the ground, right? So they're investing in forests and reforestation, afforestation, managed forestry. That's a nature-based solution, as is mangrove restorations, peatland restorations, or they're doing work on the borders of desertification, right? Trying to hold back the deserts. They're doing it in China. They're doing it in a number of areas. The Middle East is even doing it now. So those are nature-based solutions, right? In a simple form. And now you've got what's called blue carbon, and blue carbon basically is water-based solutions. How do you do? And so that fit into the GNT spec. So we defined it by dates of when the projects were set up. So we accepted any nature methodology that had been registered specifically on Verra and Gold Standard from 2012 onwards. And that's relevant because 2012 previously had been the UN and the Kyoto protocols, everything from 2012 forward had been this new market, right? The non-Kyoto development. So it's a very broad basket, and we wanted it to be broad. There were a lot of projects that had gotten stranded in that period from 2012, especially 12 through 18, 19. The over-the-counter credit price was low. Some of it meant that they may be operating a carbon project like saving a forest, but actually it would have been too expensive for them to even issue the carbon credits because there's a charge to issue a carbon credit. Now the economics have made it viable for enough to bring those credits to market. So that's the beginning of the pricing in GNT. So that price began a little under $3, and it's moved up into the $4 range now. It's above $4.
You're not the only exchange at the moment, right? I mean,
No.
There is the London Carbon Trade Exchange, and I understand that the Singapore government is trying to set up, or Temasek together with the banks, with DBS is setting up Climate Impact Exchange. Just the profile, who else is out there?
The only one that we see that really has any scale at the moment is CBL Expansive out of the United States. So Expansive is out of San Francisco, and that's actually a data company. They were one of the first ones to push into the ESG data, customizability using AI and to track carbon footprints. They then acquired CBL. CBL was an existing broker dealer that had an emissions over-the-counter trading arm, a bulletin board operation. Their goal was to actually push into the aviation space early on, and they had teamed up with Iata.
But this group, the CBL, comes actually from immediately upon the way in which you're describing it, San Francisco broker dealer, they're OTC people.
Right. Who moved into more traditional futures market space. So they teamed up with the CME to launch a futures contract. That's it.
Okay.
So they're using all the old school mechanisms, the same way you deliver soybeans on the CME, you're going to deliver carbon.
They're the only people that are seriously doing price discovery from a market perspective.
Yes.
And the London Carbon Trade Exchange is not in your sight, like you don't. And why is that? I mean, I would have imagined that the UK would have been a natural site for the exchange to take off.
I will tell you, you will see the countryside littered with multiple exchanges in the next 3 months. There's so many people that want to get into this. It's the hottest thing. Now everybody's a sustainability and green expert, and I want to get into the carbon space.
So it's becoming a cottage industry. That's what you're saying.
Oh, yeah. So it's going to be a lot of spaghetti against the wall.
Okay.
But at the same time, there's going to be a lot of silos. So there may be a very good London exchange, but it's only relevant to the UK. Carbon's not borderless. This is the thing that I'm amazed at what's going on in this market. We're talking about a global climate problem.
Well, in a way, blockchain does that, doesn't it? Because it's so easy to conceptualize and crystallize and tokenize that practically everybody can tokenize, right? So that's the easy part. The hard part is to make it into a market. Several things to have the critical mass and to make it tradable. There's price discovery, and because it's token and it's because it's of the way blockchain works, you need validators who validate each other. So that's the hard part, isn't it? Are you past that?
We're way past that. I mean, I think the more important and hardest part is actually that we're actually delivering something. This isn't a synthetic. This isn't Bitcoin. You know, the purest intangible asset, which has nothing underpinning it. Every one of our tokens is a 1-to-1 ratio. Every one of them has a carbon credit, a certified carbon credit attached to it. The key for us is that we've created a carbon trust, right? We have taken a disparate amount of carbon representing many different types of carbon projects, put them into categories, but we've allowed for the first time the entities that have generated those carbon credits, the project developers, for the reason why carbon credits were invented in the first place. The plot sort of got away from it, that the carbon developers, especially in 2012 to 19, really became the poor man in the block. They became like the subsistence farmer, because the people weren't particularly paying high prices for carbon credits, right? Because it was very social.
From the time the EU and the UN created the concept,
that was back
to about last year or this year, when carbon prices went up to $3 per metric ton.
That's a voluntary.
But what are they trading off on your exchange?
Well, we're the voluntary, so we're the $3+. But you just mentioned the EU, right? So the EU and the UN are different. Well, one began in 2003 and one began in 2005. The UN is a CDM. That's a carbon credit, a CER. The EUA market is a compliance market, which is different. They're not trading carbon credits. They're trading a permission to emit, or use the other word, a permission to pollute. And it's a finite number of allowances. So it's a closed market, okay? And so the intent there is to make it expensive. The intent there is to get it to a pricing pain point where the emitters having to continually pay a higher and higher price for the right to emit will change their behavior. Okay, and they've been able to get that price, which in 2017 was €5, and the market was, nobody cared. And what they did in 2017 was halved the number of allowances in the market. They basically did a 2-for-1, a 1-for-2. They split it, reduced it by 50% because they wanted to get the price to €10. What they did unintentionally is they went way past that. They took a price from €5 to €20. Now suddenly people are going, whoa, what's going on? But it coincided with the beginning into 18 and then early 19, where the Europeans were becoming leaders on climate, right? And suddenly this smaller availability of allowances at the same time, the beginning of like the Greta Thunberg effect of awareness of climate and very generational awareness of climate, companies were saying, hey, we're willing to pay a higher price, right? So the price went from €5 to 20, and then went up a little bit above that. And then we had the March, April down spike in 2020. It's in excess of €50 today. So it's achieving its philosophy of making carbon expensive for people that are not being green. That's one. The problem is that's only relevant to the EU. That's not a fungible product. I can't take an allowance.
Does that include the tax mechanism? So it's not a price discovery. It's basically you've got your back against the wall. So
it's a tax,
right? And every industry is regulated to be carbon neutral. So they got to go out and buy that the EU carbon credits, right?
Yeah.
Now, someone in the UN had indicated that unless we achieve prices like $40 to $80 per metric ton, that carbon credits would not be sufficient to fund all these projects that are taking place, right? So you from a market price discovery mechanism, you're still early days. You're still on the starting block.
And you're not incorrect. The majority of what we're seeing in terms of transparent pricing is at the lower end of it, because that's where the largest inventory is. So if you're looking at like a peatland restoration can produce a large amount of carbon credits. So supply demand, if you've got a large supply, you're going to have a lower price until you get the balance of acceptance of peatland. And we want to invest in peatlands, which actually are very valid investments. But they've come up from $1.50 to $6 in just the last 6 months. So there's incentivization now to invest in more peatland projects, and the higher the price goes, the more peatland will be basically set aside. But the other end of the spectrum is the newer technology, right? Or the ability to scale good, like carbon capture or carbon removal. Those numbers today are anywhere from 30 euros to $300, and people are willing to pay it. The problem is that there's not enough of them, right? Some of the projects that are being invested in only have maybe 30 or 40,000 carbon credits a year, where the demand is probably well in excess of 10 or 20.
So what you're saying is you have an inventory, but it's not coming on fast enough for you to grow your business. Is that what you're saying?
Yeah. So now, is $30 enough to support biochar, which that's, or if you get it to say $40, well, now you're going to have a new investment. Somebody else will go into the business. And then if you get it to $50, it'll be more. So then you expand the validity of that particular methodology, right, around, say, biochar or carbon removal. Depending where you are in the nature-based solutions, they are considered removals, right? The replanting of forests, denuded land, is considered a removal, because if a tree exists already, it's already holding carbon. You're just saying, don't cut the tree down. That's not carbon removal, that's carbon sequestration. Carbon removal is when you take denuded land and put a tree back in the ground. Now you are removing carbon and at the same time holding it. That has a higher valuation.
Just to give context to this conversation, especially for people who are new to everything that you're saying, and also to construct it a little bit better. You said that carbon trading is not borderless. So that was very interesting. Okay. Now, the inventory that you have is borderless, right? Because you would go out and look for inventory from anywhere in the world.
It's based on methodologies, right? And the methodologies are borderless, and trees are borderless. So a tree, interestingly, a tree in Sumatra is worth like $5 today, but that same tree in California is worth $16.
Okay.
It's doing the same thing, though.
Just talk us through a little bit about how you build your inventory. Where do you get them from, and who validates it? Who regulates the inventory that you have here?
The key to a carbon credit is the economic event. The unlocking is really the end result of what a project developer wants to achieve, because that is his financial return that supports either his initial investment to come to market or the ongoing investment of maintaining, whether it's a methane gas capture facility or a managed forest facility. The key for us was to create a transparent market, and to allow for the entity that incubated that credit on that carbon project to get as great an economic return that he could via our exchange. Because there was no transparent marketplace really for these carbon credits in this no man's land period from 2012, the project developers were either had to go to market directly themselves, and they hoped that they had some, for the most part, were corporates that were willing to support their project because it had some good, like UN protocols, SDGs, or they had to go to the brokers, right? And of which CBL was one of them. And the broker said, yep, we'd be happy to be your marketplace, but you're going to pay us anywhere from 15 to 30% notional of the transaction. Now, the financial markets today work in minuscule basis points, right? If you do a transaction at any listed exchange that you're talking about, 23 basis points. You're not talking about 500 basis points. We've seen transactions that are been going across some of these bulletin boards, and some at scale at 3,000 basis points. 3,000 basis points, meaning if you sell a $3 credit, you're giving $1, you're losing $1, basically. You're going to get, that project developer is only going to get $2 after the transaction. How are we attracting those same developers? On that $3 transaction, we will return $2.97. That's it.
Who audits the portfolio?
First is someone says to us, hey, I've got a CORSIA compliant project, right? And they come to us and we say, okay, we look at it in the registry, the methodology. So say it's Verra, right? And you can see it. It's an NGO, Verra, so it's got a public forum. And you can go in and you see the project. You can see the date of registry, beneficial owners, and that's the first step. Second step is to look at how many credits have been produced, how many credits have been retired. So in other words, what's the available inventory? And every carbon credit has a serial number. Every carbon credit has its own LEI. We take that LEI and then we send it to a company called BSI, British Standards Institute. So BSI does a second look for us and says, look, here's the information we know. This is the information that was given to us. You take a look at it and come back and tell us if it's all aligned correctly and anything else that you see. And once BSI comes back, they'll issue a certificate on the project, which is the methodology. And then they'll issue a verification that those blocks of carbon credits, say from carbon credit 16 to carbon credit 32, are in line and are available for transaction. So that's the key too. You have to make sure, but all of this information sits on somebody else, it's sitting in 2 or 3 different places. So we consolidate it. And only at that point in time do we inform the entity that wants to give us their carbon, and we will accept it for deposit. He informs Verra to transfer it to our carbon trust. We then, and the trust is independent of us and how it's operated. It then confirms that it has received the credits. And then only at that point in time do we do what's called minting. So then the carbon credits are in the account of the person who transferred them. We've created an account for him. Looks just like a brokerage account that you would have in your own portfolio. And we assign a mark-to-market value. So if it's a CORSIA credit and it's currently trading at $3.10, that's the mark-to-market for his. So now he's got a verifiable price, transparent, and he's got it securitized. The tokens are issued, and the token becomes the instrument of trade.
Yeah,
the instrument of collateralization in his wallet. And then now he doesn't have to do anything else. There's no demand to trade, but the key is we've changed the nature of his carbon credit.
The tokens that sit on your exchange, how are they traded? How liquid are they? And how have they been? I see that the technology itself is pretty good. You can trade them like they're updated like in milliseconds and stuff like that. But what do the tokens now look like?
It's an ERC20 standard. Everything was developed internally in terms of our blockchain methodologies. We have the exchange itself is a hybrid model. We have a traditional markets front end, like you would see on any one of the major exchanges. We have a traditional trading engine, a matching engine for matching of prices. Everything else behind that is all blockchain and ledger architecture and token based.
Permission or permissionless?
It's permissioned in that because we have KYC, because we have high standards, but when you say permissionless, how do you?
Well, it's obviously, 90%, 99% is permission in any exchange platform.
Yeah,
I just threw that at you because I wanted to see whether you'd want to take it permissionless at some point, where the token takes a life of its own. Yeah,
we will. So and that's important because again, that's the wonderful nature of Ethereum, right? The key to that for us is can an AirCarbon ETH CORSIA token live outside of AirCarbon? The answer is yes. but the carbon, the underlying carbon will never leave the carbon trust. And that's the key. So even if an ETH trades away from the exchange, it'll always have an underpinning and a price methodology. And in order to come back into the exchange, we've adopted, well, this whole thing about travel rules and all that kind of stuff. Basically, it goes from a white list to a gray list. It has to re-enter the exchange market through a whitelisted entity in order for it to be either retraded on the exchange or for the carbon underlying it to be delivered. But it can trade and live on its own. So we've had a number of conversations with some other large trading venues that would that want to add carbon to their inventory for trading products, have come to us and said, "Hey, can you do this with us?" And the answer is yes. So that's where we see it's not just about trading token. The key to me is we changed the nature of how you own carbon. We've changed the nature of how you trade and price carbon. But it's more importantly, we've created the trust and custody structure that allows for the beneficial ownership of carbon. And it's not just living on a spreadsheet within a method, the registries. We've brought it into the financial community, and that's key. That's really key.
Has the ISO standards sort of started to define how a token like this would look like? I mean, I know there's Ethereum, but is there an ISO equivalent? There
are, and that's an evolution. That's an ongoing process, especially over the last 5-6 months. So yeah, there is an evolving standard around it, because people realize, even here, like in Singapore, when they set up the PSA, in conjunction, the IRAS and MAS and the whole thing around the Payment Services Act, and it was really meant to go after the guys that were in the purists of tokens. So you had the payment token, the utility token, but it isn't just that, right?
Yeah, got that. Yeah.
It's not.
So which is
that's the interesting part of you were seeing this transition away from the traditional representation of an underlying asset, that it could be represented with a standard security construct and it's the token methodology or that becomes that. So that's ISO is pushing to that. You've got a lot of tech, the new famous word, taxonomy.
Well, everyone is into definitions and now the thing is, you have 87, you said 132 companies that are trading actively.
Anytime we're adding companies every day. So I can tell you that number was 119 a week ago.
Yeah,
so,
and the number I have is 87. That's kind of a long way since 87.
It's now, amazing. Yeah.
But you don't have enough inventory for them. So your exchange is not liquid enough.
Well, no, we don't have a problem with inventory. We do have inventory. But our volumes are climbing exponentially as we're adding inventory. I mean, as of today, I've got 847,000 tons on deposit in the exchange. But the interesting thing is, carbon by nature, unless somebody wants to take their carbon and leave, once carbon is deposited, it stays sticky in the exchange. The only way carbon traditionally disappears is when you do buy and retire, right? Inversely now, for the first time, I've created carbon that is not solely being transacted for buy and retire. I've now created an investable asset class that someone can deposit a carbon credit. They've got a transparent price. The token becomes the tradable instrument, and you can have continuous trading as long as that carbon lives within the inventory of the exchange. Now you've got a balance, right? It's like looking at an ETF for gold, right? When an ETF gets created, they have to go in and they have to buy the physical gold and deposit. So as long as the ETF is alive, the gold is alive in an HSBC vault in New York or in London, right? The BOE, right? And they're in balance. We've done that for carbon credits. I will continually add inventory, and as I add inventory, it will more underpin the different classes. Right now, the 4 classes that we have, but we're going to expand that basket. We already have demand for like the LNG industry, right? Carbon neutrality on LNG. It's got a very high demand on deliverable carbon. So we can build a credit around transportation for shipping. also.
McKinsey, the consulting company, apparently did a study and
Yep.
said that the 4 problems with a carbon trading market is liquidity,
Yep.
financing to trade. That's interesting, which is the problem of the 137 companies that trade on you. So is that where the banks come in to provide financing?
Right. So I think we got it backwards. If you go back to the early days of energy, right? It's 40 years ago, right? So you look at the first futures contracts for energy trading. The first one was actually 1975. That failed. They relaunched in 78. And that was the first fuel oil contracts. One was in New York and one was in Amsterdam. 83 was the first crude oil contract. The second crude oil contract was 88, and that was in London, first in New York, then London. And then came the natural gas contracts, first in New York at 90, 2 years later in Europe. And then came the power contracts, right? And then we take that all for granted today, right? Those are all benchmarks. Before that, there was no underpinning for finance. It was all about, because there was no transparency in the price. I was investing with Exxon because they told me that they've got 60 wells in the Permian, and the estimation is that they're going to get 1 million barrels. That was all guesswork. To, hey, the price of oil is $63. We see a forward curve out to $72 for the next 10 years. Well, now I can finance all of that because I can hedge it all on the exchange, right? And that is the majority of open interest on exchanges today, right? And Asia hasn't matured as fast as Europe and North America has in that respect of utilization of pricing and forward curves to hedge the risk on finance. But that's where carbon is going to change. So carbon today is stuck right at the front end in the spot price. What's the price of carbon today? There are one-off deals where only because it's a good project developer and someone like Shell goes to them and says, hey, we like what you're doing. We want to support your project. We'll put a floor price in of $2.50 on your project. And by doing that, now we've established value. One of those particular projects that they did that with in Colombia, forestry project, went from $2.50 to $7, and a combination of 2 efforts. One, Shell put a floor price in and the world went, oh, that's got to be a good project. Secondly, the government in Colombia said they wanted to have a carbon tax. But the incentivization is you have a carbon tax, that money, you have to then figure out how to put that money back into sustainability. So now you're actually wasting money because then you've got to put a whole infrastructure in. Instead, they said, let the entrepreneurs incubate good credit projects, and in kind, they can use portions of those credits to actually pay their carbon tax. So they set the price at $7 in Colombia. So here you had a forestry project at $2.50 backed by Shell. The country said,
plus $7.
And now the carbon credits are now worth $7, right? So the pure discovery of a price that went into the public purview then said, then we're doing the same thing with carbon. So now we've got a discoverable price. We do have liquidity. We have professional liquidity makers also. We have market makers and liquidity providers.
Who are the market makers in carbon trade?
So we have 2 different entities. One is a market maker, and they are currently carbon brokers. They're out of Geneva. I'm not at liberty to name them, but I will name my liquidity providers. They are out of Zug in Switzerland, out of the crypto valley. It's a company called Flavtech. And a very, very, very interesting guy, Anton Golub, who was the founder there. It's a very professional liquidity provider, and there are those around the world. He worked on actually the first carbon token in Switzerland, which I invested in back in 2015. And it was a company called Lykke, Lykke. And they were a little bit early, but their philosophy was that alongside of other digital products that we want to trade, we should have something that's carbon, and it was based on trees. He had written that first program. So when he saw what we were doing, he said, hey, I'd really be interested in supporting your project from a liquidity, because I understand the project, I understand the technology. Can I do it? So yeah, that's what we've got. And then subsequently, we've got a number of the broker dealers that have come and said, look, I've got both sides of the trade. I've got natural buyers and natural sellers, but I'm out here in no man's land. Can I bring these trades into the exchange for securitization? So,
do you look out for the broker dealers, or they come and look for you because they're looking for assets to trade on?
a combination of both. Not all broker dealers love exchanges. They're the guys that are doing, higher
Yeah.
notional values.
Was he also OTC before? In order to provide liquidity, what does he have?
His understanding is the nature of commodities. His understanding is the nature of technology. His understanding is the nature of markets. So he brought that understanding. Part of it is just his passion for carbon and decarbonization. That was sort of how he found AirCarbon, and we started a discussion. But more importantly, we're an electronic market, right? You need somebody who understands your technology, and not all people understand. We're not pure crypto, right? There are pure crypto liquidity providers that can just bang. It's a mathematical. We've got a bit of difference. We're going to have supply demand economic structures around this. We're going to have multiple pricing facilities, meaning different prices for different carbon-based products. He understood that, and he's been providing liquidity to a number of entities already.
I've got so many questions for you because you're actually describing the birth of a carbon trading exchange, right, in a marketplace. I'm in Beijing. It's a huge, carbon trading market, and it's making its own commitments to the Paris Accord and so on, right? And
Absolutely.
Now, you said that China works on an allowance framework. How many countries do you think would work on that model? And does that mean that there will not be a transparent market as a result? But it's a market where the price is sort of closely guarded as a result.
It's not opaque. Technically, from an acronym, it'll be the largest carbon trading ETS in the world, just by the nature of the size of China. And their aspirations to be carbon neutral by 2060. For the last decade and a half, they've had carbon trading facilities around the country. They had 9 pilot projects. I participated in the Shenzhen and Guangzhou one myself. And that's all now being wrapped up into this master ETS. But the market is very specific. It's the utility companies, and it's about mitigating the carbon footprint or the carbon responsibility of the utilities in China. That's it. It's not an open market at the moment. Will it be an open market at some point in time? I'm sure it will be. Does China have voluntary credits? They have what are called CCERs, which are China's version of the UN CERs, which do fit into the UN protocols for. They can be transacted outside of China. And they're relatively cheap, and they're legacy credits, and they do trade offshore. We've seen some of them come out, usually around mostly around hydro renewables. But they are setting up a voluntary carbon market in Guangzhou, right? So what they've done is they've set this small entity up in Guangzhou, and it's 5 exchanges. They're all owning 15% or so. That's a test market to trade voluntary credits. So its positioning is logical. Southeast China facing outbound, Guangzhou, Prova Delta. Will that be the venue to trade on and offshore? China will be connected to the voluntary carbon market, ex-China, for only 5% of its volume, by law, by regulation. So that's a little tiny.
It's the same way that renminbi trades outside of China. It's a small volume for price discovery, but the market is essentially of its own price discovery or validation, but the real market is all internal. Now, what you're doing is very important because with the market, corporations can start to take carbon credit into their book. They can have a valuation for it, and then that gets reflected in their share price and all of that. So, as an asset, their own business as an asset as a result. But at the same time, you're saying that the markets that are coming on stream now, like yourself, are mostly cottage industries. Do you see yourself running ahead of everybody else and becoming the defining player? And what will define the defining players relative to everyone else who's creating a marketplace? Or do you see a marketplace, because it's all on blockchain and because the standards are being set, they become interconnected as a result, and buying and selling between markets?
I do truly believe we're leaders, and it's part of it is we anticipated where we thought the market would go, and we put our money where the mouth is, and so far we're fairly successful. Are we going to be challenged? Absolutely. Well, it's too opportunistic to not. So we've got a lot of people that are very passionate, but it can't be confused for expertise. And so a lot of that opportunistic is, hey, carbon is so hot, we got to get into this. It's not an easy thing to get into, and it's very knowledge-based. Because it went into sort of this very dark age for like 10 years, there's not a lot of talent, is what we found very quickly. Or most of the talent are older guys, but guys that they were in the business when, say, in their 20s, dropped out of it for 10 years. Now they're in their mid-30s. Do they cycle back into carbon trading, sustainability, environmental compliance and such? Some are, some aren't. What our finding is an overwhelming majority of women in the business who went to university during the dark ages and were passionate about sustainability and environmental compliance, and that's what they studied. And it would not have guaranteed them a high-paying job even 2 years ago. They're now in high demand because they're actually the qualified people.
They're in demand because they're qualified people, because they understand the underlying asset.
Yeah.
Whereas you understand the underlying asset because that's what commodities are. If the underlying asset is rotten, you know the whole market won't exist, right? So in that regard, talk to me about regulation. How much regulation do you need in your business?
I've always operated in regulated markets. I'm not afraid of regulators, and actually, I've always realized there's a lot of value created in regulation if you approach it intelligently. So when we formed AirCarbon in 2018, went to MAS in February of 2019, and we sat down with them and said, hey, we want to put in an RMO application for a carbon exchange. So we started the conversation and everything, and we traveled through the typical paperwork and writing rule books and policies and procedures. And then we got into early 20, and we really anticipated we'd conclude it. And then the world changed, right? And MAS was unavailable and went offline for 6 months, like most regulators did, trying to manage all the other insanity. And when the light bulb went back on, they said, hey, can you come in? And this was in July of last year. So we're a year and a half into it. Still no resolution, but they're very supportive of what we're doing. And they said, can you give us a seminar on blockchain and a seminar on carbon? So we sat down with them, we did it. It was really good. It was very interactive. They were very thankful, went away. And 6 weeks later, they called us up and said, hey, we just want to let you know, we don't have to regulate you. I went, what? I'm an exchange. I'm going to trade. They said, no, it's not. You're doing everything correct. We have a couple of metrics. You have to have custody for the underlying product, and you have to segregation, you have to have fiat, you have to have the KYC and stuff, but you as an exchange and your product, no, you can go ahead. And I said, because carbon is an intangible asset and we do not regulate intangible assets. I went, wow, why didn't you tell me that a year and a half ago? And I said, actually, we hadn't thought about it a year and a half ago. It wasn't relevant. We were thinking of you as typical exchange and that you were going to do this and this and that. And then we realized actually the product, so they don't regulate intangibles, and carbon by nature has never had tangibility. From the day it was designed under the UN protocols and in Kyoto, literally there has never been a piece of paper ever printed for a carbon credit. It's not represented by any physical nature. And as a result of it, MAS didn't regulate. Find out was, no, it's not unique to MAS. The United States does not regulate carbon credits either. So the CFTC wrote a paper in November last year, right around the same time we got basically a no action letter from, or note from MAS saying that we can go ahead. The CFTC said the same thing about carbon credits. They do not regulate carbon credits. What they do regulate in the United States is the nature of the underlying product. So if you're trading a futures product, the futures becomes regulated because you're accepting marginability and the settlement. That's actually the regulated part, but the product itself is still unregulated also in the United States.
So you don't have a futures market yet, right? I mean,
we do not, but we will in very short order. So our aspiration was we wanted to have a functioning spot market. We've jumped to futures on anything quickly without good underpinning market formation.
Goodwill is an intangible asset. Crypto is an intangible asset.
Yes.
So
Bitcoin is an intangible asset,
And
right?
carbon is an intangible asset.
Yes.
The projects that carbon is based on, there is no leverage. If there's a leverage, does that become a tangible asset? Like if there's a borrowing involved?
Carbon would only become a tangible asset if we created an indice off of an underlying carbon price. For some reason, the nature of an securitized index has tangibility. Under the British law systems, they printed paper at some point in time to represent those, so that becomes tangible.
And the tokens that you issue?
Yeah, ERC asset, and this is the classifications under the PSA, which has become a global standard. The three coins, the three tokens, the payment tokens are regulated. An asset-backed token is unregulated because they didn't want to impede commerce. It fits into the spot commodity architectures. And again, what's underpinning the token is an intangible asset, so it does not get captured. The nature of the token. What does get regulated is our management of funds, right? But that's the settlement process.
And the settlement process gets regulated by the financial regulator or the registry of companies?
It's done under here. It has to be managed by a CMS licensed entity and a custody bank. They take on the responsibilities. Yeah. With a lot of KYC for every entity that comes in that's within the ability to inbound or withdraw funds. That's what it's based off of.
Now, I also understand that Singapore is setting up a climate impact exchange. So is that a potential competitor, or do you see that as being something different?
I see it as being different. We were myself and my partner Bill, we were actually guests at their task force, which was run by the BCG group. It was a really interesting exercise, and of a group of people that had never traded carbon, had never traded a commodity, had never built an exchange, and a few of them were passionate environmentalists. But basically the target had been determined before the decision came out that it would be even called CIX. Fundamentally, Singapore wanted to take a position, a good stand, in their grand green plan. Temasek and the PM's office realized that Singapore itself is under threat. There's no doubt about it. So they wanted to take the highest road that they could and put it at an exchange level. So CIX, its intention is to be in what's called the primary market, meaning that they're at the upper end of the carbon market. It's going to be big. It's going to be high finance. Everything is about quality. Everything is about verifiability. And these were things that they identified as flaws in the current carbon market. They felt that, especially because they're actually focused on a single part of the carbon market, nature-based solutions. So let's just look at, say it's forests. So the problem is, how do you make sure the forest is what it says it is? Is it doing what you said it's going to do? Is it still there next year? All the different things. So you can employ technology, whether it's ground or LiDAR or satellite. So they want to build this package and then plug in a trade finance facility based off of good delivery credits that they've identified at this very high quality. And if you look at their wording, it's all about quality, verification, and such. So, and if you look at the back, a large part of the Carney Winters task force, a large part of it says the same thing. And lo and behold, Bill Winters' bank is part of CIX.
Tell me a little bit about your company, because where it is now, how much funding you've achieved, and how much more do you think you would be going for? Being borderless is a very important part of your business model, which is when you're not tied to any country or any specific idea of location, then you become an attractive marketplace. In fact, I've read that you are also carbon negative yourself. I mean, as a company.
We're actually the first exchange in the world to be carbon negative. The only exchange to be carbon negative. Yeah.
Okay. And what what does it take to be carbon negative? And just talk us through a little bit about you as a businessman, the entrepreneurship part, raising capital, and where you're taking the company. Yeah.
So the company, so we're 3.5 years old. We've got 17 employees. We're running it very efficiently in that respect, and you can do that today with the nature of technology and blockchain. But we'll be double that in very short order. We just finished our Series A round. We raised a little over 5 million, which is what our goal was. We got our valuation in the mid 20 range, and that will give us we've got capital adequacy to move significantly further down the road. As I said, we're in 27 countries, 132 firms, and it's very diverse on the buy side and sell side. So we've got a good mix of sell side from carbon and buy side from investors and traders. We're probably going to go to B fairly quickly is what we're finding out. I've actually never seen a funding round get oversubscribed, but ours was. But I can tell you, we began it back in September of last year, and it was painful. September, October, November. And then it got to December, and it was like it opened up. We suddenly had people going, "Hey, you called, we're interested now," that kind of thing. By March, we were fully subscribed. And then people said, "Hey, can you expand your A round?" But the great thing now is we've got really good opportunities to deploy the capital. We're not just going to be in Singapore in short order. We're starting to see demand for regional bases, and part of that is the nature of the Paris Accords, that people can build regional exchanges. Part of it is the transition period of one of our member firms is one of our clients, I should say, is one of the ride-hailing firms, and they wanted to decarbonize at the ride level, so that's very fractional. When we built our credit, we fractionalized it with intent down to 1,000. So basically, a ton of carbon can be broken into 1,000 increments at kilo level. So you can either invest in it at a fractional level or retire it. So we gave them a solution that said, "Hey, if you're going from point A to point B, and that's 17.6 kilo, well, you got 1,000 kilo in a ton." We set aside a certain specific set of tons. They aggregate it. At the end of the day, they report to us, and then we retire it for them. So we've gotten all the way down to that level in terms of client service. We're at the other end of it, where we've got high net worth entities that have come in and said, "Look, I have $100 million portfolio. I'm going to put $10 million into carbon in the next 6 months. I'm beginning now." And they're going to build a $10 million portfolio at today's current prices, and then they're going to hold on to it. That's it. And in between that are the people like the ride-hailing companies who are saying, "Okay, yeah, I'm in Singapore and Indonesia, but I'm launching in Cambodia and Laos. I want region-specific carbon projects for the offsets in that region." So we've set that up. So we look for good projects in those regions, and we use that for them, and that's part of marketing.
Because they will be seen as being local in all these countries, right? These are companies that operate in multiple locations. So that's an interesting part of your story, which is, you're not just on the trading side, but on the supply side, there's a whole dimension of carbon offsetting projects that can be funded by your marketplace.
Yes.
That they can have them registered and then made visible, even not just being traded, but many of these projects are not visible enough. So that's interesting. Do you need marketing people to go out there and look for projects like this, or is there enough to be done already as it is?
You always need eyes, and carbon projects generally are everywhere. So you can put people in the Amazon, you can put people in Central Africa, or you can put them on Sumatra, right? Or they could be in Western Australia, or they can be in British Columbia. All of them have, it can be a carbon project. And China, similarly, right? The work they're doing there. There were a lot of experts 20 years ago, 10 years ago. There's not enough experts today because the market contracted so much. There are a few firms that do very good work. and they're adding assets daily. For us, we actually put out basically an RFP to guys that are either project developers or guys that know of projects that maybe had stopped because they didn't have adequate funding, that they need a seed round of funding to get them going again. And we've identified a couple of those. One in Sri Lanka in particular. It's a legacy tea plantation. It's run by women. It needs to be replanted and portions of it reforested. That qualifies for a carbon credit, but it also qualifies for SDGs. When you change the lives of indigenous farmers, you change their business as usual, fundamentally is what it is. So they had been trying to get funded for quite a long period of time, and they heard about us through somebody else, and they reached out to us. So these women have this opportunity to change the use of this legacy tea plantation, and we're like, sometimes they can be very expensive. We're like, what are you looking for? And they said, well, it's a lot of money. I said $500,000, and not to be a wise ass, we were choking on the other end of the phone. We're like, that's all? Nobody would give you $500,000 for this, and this is a scalable project. It'll produce 100,000+ tokens a year. Agro tokens are the worst case. It's worth $4 or $5. It would pay itself back in 1 year, and it's got a 30-year life cycle. I mean, it'll be a game changer for these people. But because it was women sitting where they are, and it was just culturally, it was not in the nature of we're not investing in you. But I'm sure if it was held by a male like us, there would have been no problem getting money. So that's the kind of things that we're discovering. We're also discovering other projects that had only gotten a partial way through their registration and they ran out of money, right? Yet they're doing good things. So to get them re-jump started. All we ask is, if through their first economic event, pay back a portion of what we gave to them. With interest free. But I want their credits to transact on my exchange. I want to build a continuous pipeline of good delivery credits over a decade, right? Minimum of 10 years. But this is a market that becomes predictable 30 years in the future now when it comes to nature. So that's how we're doing this incubation also. So there's a lot of really interesting opportunities.
But how do you do the valuation of these projects? How much money do you think they need?
I'll be honest, I leave that to my partner, Bill. Bill Pazos is one of the legacy guys in the carbon industry. He was an early adopter back in the late 90s when it was not many people were in the business. And he had been a banker and a bond trader at Manny Hanny. He understood the business, understood the NDF finance, and then understood the opportunity of the first Kyoto and UN protocols he built a firm called EcoInvest that was at one point accounted for about 25% of the global projects for methane gas capture around the world. They were that significant. They wound up being acquired years later in 2008. And then he went on to do other business, and then the market changed and he got out of the carbon business, and then he came back in with me in 2018. He's a bit of a legend in the business. So he understands the minutia. He understands what you have to do from an infrastructure and an initial appraisal of the value of a project. He understood the business, understood the NDF finance, and then understood the opportunity of the first Kyoto and UN protocols he built a firm called EcoInvest that was at one point accounted for about 25% of the global projects for methane gas capture around the world. They were that significant. They wound up being acquired years later in 2008. And then he went on to do other business, and then the market changed and he got out of the carbon business, and then he came back in with me in 2018. He's a bit of a legend in the business. So he understands the minutia. He understands what you have to do from an infrastructure and an initial appraisal of the value of a project.
Tom, thank you very much. I just wanted to know that I'm very proud of what you're achieving.
Thank you.
And knowing you as my personal friend gives me a front seat view of building an exchange from scratch in this whole new dimension of impact and carbon credits. What are you looking forward to with the Paris Accord meeting in Glasgow coming up. What's adding up for you as we get closer to Glasgow?
We're definitely not in the mainstream in terms of what we're doing with our exchange. I feel a bit like a salmon on my spawn swimming against the stream.
Okay.
But we've got a lot of followers. I got a lot of salmon behind me that are thinking the same we are. So we're going to go into Glasgow well positioned for anything other than people are going to go, hey, we're still looking for that exchange, and we're going to go, hey guys, we've been here for a year already. Wake up, okay? The second thing is there's still challenges on the table in Glasgow. I mean, the Article 6. The issues, counting cross-border, double counting and double accounting, those haven't been rectified. It's going to be really interesting to see if they can achieve that. But we're going to go in and have some fun because, first of all, we haven't been able to do it for 2 years. And a lot of the carbon people generally are really nice people because they're passionate. They're really passionate. And I think the awareness today is even higher than it has been ever before. This is not just the bureaucrats and the UN guys and the financiers. This is people that are going to go in there going, no, now we got to make a change. It is a time to change, and it's going to literally be done one project at a time, right? And we got to build a universe. We've been able to do it for every other major product in the world, right? We've been able to identify a problem. We need transparent pricing and a new marketplace, and then everything, all the related industries grow up around it, right? Well, we got to do that for carbon. And so if there's a message, that's the message I want to bring to Glasgow.
Thank you so much. And this is a continuing conversation. I'll check up with you again to see how you're taking the market and how you're building a cross-border or a borderless marketplace when everybody else, is trying to sort of, create a market within very specific constraints. Yeah. Thank you very much for speaking to me today.
Thanks. Appreciate it. Thank you, Emmanuel.